Hello, guys. Happy Easter 2025. Today, I want to talk to you about this. And that is not messy that is messy handwriting, but investment property purchase in a self managed super fund. If I've lost you already, don't go. Just bear with me because this is really surprisingly basic and maybe something you want to look into. So, maybe you want to buy an investment property, but there's fear of how much it's going to impact your lifestyle. Maybe you have no borrowing capacity left and so you can't, or you think you can't buy an investment property. Well, here's a way that you can with a self-managed super fund. Now, it's a little bit complex the way the structure works, but a good accountant can set that up for you. I recommend you speaking to a financial planner to work out if you want to jump into this space. But I'm here to tell you about how basic it is from a lending perspective. So, first off, I told you that it would have no impact on your lifestyle. I'm going to tell you how. I'm also going to tell you how you can make this purchase without using any of your own savings, not a dollar. I'm also want to tell you one other factor, which is your level of existing debt is irrelevant. So if you've got $2 million worth of debt, $5 million worth of debt, whatever it is, it does not have an impact on what we can borrow within a self-managed super fund. As long as your payments are on time and you've got a decent credit score, we're good to go. And it's not going to have any impact. So here's how it works. With any loan, doesn't matter what type of loan it is, we do look at income and existing debt and what the new proposed debt's going to be, and if the existing income can cover all of that together. Now, within a self-managed super fund or a new self-managed super fund, there is no debt. It's a brand new self-managed super fund. There's nothing in there. All that we need to work out is what is the income that's going to be coming into this new self-managed super fund. That's how we're going to work out what you can borrow. So today I'm going to work off a practical example of purchasing a $500,000 property, and we're going to borrow 80% of that to purchase as a loan to purchase the property. So we're going to borrow $400,000. We're going to spend $500,000. So you need to know, how do I get the $400,000 loan, and how do I pay for the $100,000 deposit plus all of the other buying costs? So here's how it works. So if you're PAYG employed, you get paid 11.5% towards your super each year by your employer. So I'm going to work off a gross income of $150,000, whether or not that's individually or combined, doesn't matter, but we're going to work off $150,000. We're going to get 11.5% of that in our superannuation every year. Now, if we break that down to a monthly payment, it's going to be $1,437 every month. Our $500,000 property is also going to have a tenant in there paying rent. Now, that tenant's going to be paying us $500 a week. Now, when we put that into a monthly repayment, it works out to, we calculate that monthly, it's $2,166. Now, when we put those two numbers together, that's the overall income that our new self-managed super fund is receiving. So when we combine them together, it's just shy of $3,600 a month. Now, I can tell you today, for today's numbers, $3,600 a month is enough to service a $400,000 loan within a self-managed super fund. So there's a tick, we're good. Now, we've still got some other shortfall to account for though. We've got a $400,000 loan, we're trying to spend $500,000, and there's some other costs involved. So on top of the $100,000 deposit, we're going to need to pay stamp duty, conveyancer, building and pest, setting up the fund with the accountant, potentially funds towards paying for a buyer's agent. All of those funds we put together, you're going to look at around $150,000 to $175,000 that you're going to need to put towards this purchase. Now, here's how this costs no money out of your savings. That can all be used out of your existing superannuation balance. So when you set up your self-managed super fund, you can roll all the money in out of your retail fund into this new self-managed super fund. Maybe you've got, for example, $400,000 in your self-managed super fund. You've got an option just to put in 150 grand or 200 grand and have two different funds. You can have a self-managed super fund which services this new property, and you can keep part of it in your retail fund as well if you would like to. But the most important thing here is we can borrow the money, we can make the contribution as long as you've got that amount within your existing fund. We can roll it in, make the contribution, keep things simple. Now, if you're self-employed, there's options for you as well. Even if you don't currently make super contributions, there's still options for you because we can propose what contributions we will make moving forward. Now, if any of this pricks your ears up or sparks any interest, I'd love to have a chat with you. Very happy to have a chat with you. It's pretty simple to work out what your borrowing capacity is going to be. Please reach out. Click the link below in the comments. Thanks, guys.